Ladies and gentlemen, good day and welcome to Brookfield REIT India Real Estate Trust Q4 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode until the floor is open for questions. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on a touch-tone phone. Please note that this call is being recorded. On the call, we have the following person. Mr. Ankur Gupta, Managing Partner, Brookfield REIT Asset Management and Director, Brookprop Management Service Private Limited. Mr. Alok Agarwal, Chief Executive Officer and Managing Director, Brookprop Management Service Private Limited. Mr. Ankit Gupta, President, Brookfield Properties India. Mr. Amit Jain, Chief Financial Officer, Brookprop Management Service Private Limited. Mr. Rachit Kothari from Brookfield, Mr. Shailendra Sabhnani from Brookfield. I now hand the conference over to the management. Over to you, sir.
Good morning, everyone. On behalf of the Brookfield India Real Estate Trust, I extend a warm welcome to all participants joining us today for this conference call. At the outset, I would like to give a brief overview of the macro picture in India and the impact it has on the commercial office sector. India has emerged from the pandemic as one of the fastest growing large economies in the world. The Indian GDP is expected to grow at about 7 to 8% annually, if not higher, over the next 5 years. This growth will be driven by increasing outsourcing to India, growing domestic demand, and the rapid proliferation and expansion of global capability centers, which we call GCCs. These factors will lead India emerging as an office to the world, which will drive the demand for Grade A office assets. Over the course of 2020-23, we saw a lot of right-sizing and rationalization of office spaces despite significant hiring by tenants, as they were adopting to the work-from-home culture. This is visible across geographies, across property owners in our country. However, as tenants are now either fully back to office or have adopted hybrid strategies, the demand for office space to house all the employees that were hired over the course of the pandemic is picking up. Even though occupancies are not back to pre-COVID levels, yet we are experiencing a clear revival in leasing. We have also witnessed a massive influx of global capability centers in India over the last few years due to attractive talent and cost structures that India has to offer. In fact, till 2030, India is hoping to add about 100 GCCs every year, significantly adding the existing base of approximately 1,600 GCCs present in India. The recently announced SEZ reforms have also come as a boon to property owners such as us, given that we have a high proportion of SEZ spaces in our portfolio. We are progressing well on our plan on conversion of SEZ spaces to non-processing areas and are seeing a strong interest from occupiers for leasing such converted spaces. In addition to this, the fact that Indian economy is doing well is also driving up demand from domestic companies, and there too, the SEZ reforms are quite a positive development for somebody like us. All these factors are supporting the turnaround in the demand for office space, and Brookfield India REIT is well poised to cater to this demand. Coming to our performance in this quarter, I am happy to report that we have achieved a third successive quarter of record new leasing since IPO at 0.9 million square feet for this quarter. This includes a 0.3 million square feet lease that we have signed at Calcutta, the leading Indian bank for converted SEZ space. Additionally, we have signed a short-term lease with the same bank for more than 0.3 million square feet, which is to be used as an incubation space for up to a year until their primary office space becomes operational. This short-term space is not included in the 0.9 million square feet number. So overall, if you see, the number is 1.2 million square feet in a way. We have achieved a new leasing of 0.7 million square feet in our SEZ portfolio which is almost 4 times our historical average and speaks to the strong demand that we are seeing for our high-quality campuses. The tenants that have been signed in the last quarter include the leading Indian bank that I just mentioned, Larsen & Toubro, Tech Mahindra, Concentrix, Teleperformance, Arvan RCM, Mott MacDonald, Dowling Kindersley, and the Global Capability Centers, the Brookfield Group itself. With a new leasing of 0.9 million square feet in last quarter, we have already achieved approximately 40% of our new leasing guidance of 2 to 2.4 million square feet till FY25. This gives us confidence that we are well on track to meet and hopefully exceed our guidance. Our occupancy during the quarter has increased from 80% to 82%, and we hope to have bottomed out on that front in last few quarters. We have a relatively low scheduled expiry load in FY25 with only 0.4 million square feet of expected exits and 0.6 million square feet of expected renewals. Given that our leasing guidance provided last quarter guides for a further new leasing of about 1.1 to 1.5 million square feet this year, and with low expiry load, we expect a continuous improvement in net leasing and expect occupancy to show substantial improvements over the course of the next 12 months. We would like to highlight that our Kensington asset is nearing stabilization as it has achieved an occupancy of 95%. We also have seen strong demand in Calcutta market, something that we had alluded to earlier, and our Calcutta asset has reached an occupancy of 88%. In fact, it's currently at 98% if we were to consider the short-term lease that we have signed up with leading Indian banks. We have more long-term demand in Calcutta, and we are synchronizing to ensure that when this short-term space gets vacated, we are able to tie up back-to-back with the long-term demand. For the fiscal year FY24, we achieved a gross leasing of 2.8 million square feet, including 1.9 million square feet of new leasing and 0.9 million square feet of renewals. The 1.9 million square feet is the best annual new leasing we have achieved since our IPO, with expansion plans of existing tenants capturing almost 3/4 of the new leasing demand. The gross leasing during FY24 was achieved at an average spread of 17%, which indicates that we are successfully able to achieve the intrinsic mark-to-markets of our assets through new leasing and renewals. Our application for conversion of 1 million square feet of SEZ area into non-processing area has received positive response from both SEZ Authority as well as prospective tenants. We have already received in-principle approval for conversion of 1 million square feet, and we are in process of applying for conversion of further about 0.2 million square feet. As stated earlier, we have already signed a lease of 0.6 million square feet converted space at Calcutta, split 50-50 between short-term and long-term space. We are in advanced stages of procuring all necessary approvals for the conversion of 0.6 million square feet space in Calcutta so that the new tenant can begin using the signed space. We have displayed strong organic growth with our existing leases having delivered a 7.4% average escalation on 1.6 million square feet during the quarter. In FY24, we have achieved an average escalation of 7.4% on 6.8 million square feet. Our mixed-use commercial development at Calcutta is progressing well, and we have delivered and fully leased 75,000 square feet area in downtown Powai during the last quarter. Our high-quality portfolio has an embedded growth headroom of 16%, which will be realized through further leasing and growing physical occupancy aiding margin recovery. We are also pleased to announce that we have signed binding agreements to acquire a 50% stake in dominant Grade A properties in Delhi NCR from the Bharti Group. The portfolio is completed build and comprises 3.3 million square feet of operating area and has an occupancy of 91%. It primarily comprises 3 large office assets, Wordmark Delhi, which is an iconic 1.5 million square feet asset in Delhi's airport district, Airtel Center, which is Airtel's 0.7 million square feet corporate facility located in Gurugram CBD, and last, Wordmark Gurgaon, a 0.8 million square feet mixed-use complex in Gurugram SPD. The total equity consideration of rupees 12.3 billion to the Bharti Group will be discharged for a preferential issue at rupees 300 per unit, which is at 18.5% premium to the floor price. With this, we will be welcoming the Bharti Group as cornerstone investor in Brookfield India REIT with an 8.5% pro forma stake held by them. This acquisition will increase our consolidated GAV by 22% and our effective economic occupancy by 50 basis points. Our operating area will increase by 16% from 20.9 million square feet currently to 24.2 million square feet. The transaction has substantial diversification benefits and will reduce the top 5 tenant concentration to 24% from 30%, while increasing the share of commercial or big IT park assets from 34% to 46%. With this acquisition, we will welcome market tenants such as Bharti Airtel, EY, Airbus, CDPQ, and SMBC into our portfolio. This acquisition is being done at a 7% discount to the GAV and is expected to lead to the NAV accretion of 0.9% and NDCF accretion of 1.1%. This acquisition and the preferential issue are subject to unit holder approval. The date of unit holder meeting is scheduled for June 14, 2024. Post this acquisition, we will continue to have access to approximately 25 million square feet of the sponsor group's assets in key gateway cities in India, which provide a strong medium to long-term growth potential for our REIT. At this point, I would like to mention that Mr. Sanjeev Sharma, our ex-CFO, has moved on, and we thank him for his contribution. I would like to introduce you to our new CFO, Mr. Amit Jain. Amit has been an important member of our leadership team and will be taking over responsibilities from Sanjeev and has taken over responsibilities from Sanjeev. Amit has more than 20 years of experience in finance and operations, tax, regulatory affairs, fundraising, and investor relationships. In the past, he has worked with organizations like EY, IDFC, Macquarie, and the Discovery Channel. With this, I would like to invite Amit to provide the financial updates. Thank you.
Yeah, thank you, Alok, and good morning, everyone. I'm pleased to be taking on this new role and would like to thank the board members and other members of the team. With that, let me jump into the earnings for the fourth quarter and full year of FY2024. There has been a substantial growth in earnings this year, driven by acquisitions of Downtown Powai and Tender Express G1. We have witnessed a growth of 91% in our operating lease rentals to rupees 405 crores compared to rupees 211 crores in the same period last year, and the adjusted NOI grew by 89% to rupees 461 crores compared to rupees 244 crores in Q4 FY2023. For FY2024, we have seen an increase of 55% in our operating lease rentals to rupees 1,283 crores and a 57% increase in our adjusted NOI to rupees 1,506 crores. The increase is primarily due to the addition of Downtown Powai and G1 to the portfolio, as well as our recent leasing performance and contractual escalations. Our gross asset value increased by 78% to rupees 292 billion as on March 31, 2024, compared to rupees 164 billion in March last year. Our NAV as on 31st March 2024 is rupees 333 per unit. We have achieved an NDCF of rupees 205 crore this quarter, which translates to rupees 4.66 per unit. We are distributing rupees 4.75 per unit this quarter. Our current adjusted NOI run rate on an annualized basis is rupees 1840 crore, and we continue to have significant organic potential of 16% in our portfolio, which can be achieved through the lease-up of vacant areas and margin recovery. We had updated you earlier that we had filed capital reduction schemes in some of our SPVs. One of the schemes has been approved by NCLT in May 2024, while a few others are at various stages of processing at the NCLT. We hope for these schemes to get implemented at different points over the course of this calendar year. The dividend component of distribution should get announced significantly towards the implementation of these schemes. We continue to maintain a dual AAA rating from ICRA and CRISIL on the back of our strong balance sheet, a long-dated maturity profile, and limited refinancing and amortizations over the next few years. A majority of our loans are linked to the repo rate, and we expect to benefit significantly as benchmark rates begin to trend lower. With that, I would request the moderator to open the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking the question. Ladies and gentlemen, we'll wait for the moment while the question queue assembles. The first question is from the line of Puneet Gulati from HSBC. Please go ahead.
Yeah, thank you so much, and welcome, Amit, and congratulations on decent numbers. My first question is if you can give some color on your new leasing pipeline and what is the occupancy that you expect for end of FY25?
Yeah. So, Puneet, thank you. Let me take this question. Puneet, if you really see our overall leasing pipeline is about 3 million square feet. About 2 million square feet is for SEG and about 1 million square feet for non-SEG space. Now, if you really see, we have said in last call also, and that's something we maintain. We hope that we should be in a leading guidance of about 2.4 million square feet at upper end. And considering, if we have about approximately 0.4 to 0.5 million square feet of expiries, we should have about net addition of around 1.6 to 1.8 million square feet addition from the last quarter. So we are hoping to cross 90% by FY25, financial year 25, around 90%.
Okay, and will it be more backward ended, or should we see a gradual? Will it be more back-ended leasing, or will it be evenly spread out through the year?
So gradually will keep increasing. If you really see, we have gone up, about 225 basis points last quarter. We have not considered that short-term lease. Short-term is also about a year. We have not considered that. We will see gradually increase every quarter. That's we are very confident about.
Right. And on this short-term lease, is there any chance of it getting converted into long-term? And second, are you also doing some capex for this short-term lease?
So let me just answer your second question first. We are not doing any capex for this short-term lease. There was existing fitted out space available. We have provided that. There's a chance that it can get converted, but luckily we have more inquiries. We hopefully we don't have to wait for getting it converted. We have more inquiries. We're just trying to ensure that as this space gets vacated, we're able to tie up with this long-term inquiries. So there's enough and more demand, at least in Calcutta right now. It has really seen a big turnaround.
Okay, that's helpful. And secondly, on your acquisition, if you can just run us down, it was the EV that you guys have assigned to it is almost 6,000 crore. What is the debt that comes with this asset in our books?
I would request my colleague Rachit to take this up.
Yeah. Hi, Puneet. Rachit here. So the debt that will come along on the books is about, net debt will be about 3,100 crores.
Okay.
And yeah, I mean, rest is just, of course, the usual tenant deposits that will get taken over.
So essentially you're saying 6,000 minus 31, so 2,900 crore is the equity value which is being assigned, but you guys are paying essentially 1,230 crores for 50% stake. Is that how one should read it?
Yeah, I think beyond the 3,100 of net debt, there are, of course, deposits and other liabilities to the tune of about 300 odd crores. So you should look at a equity value, of about 2,500 to 2,600 crores
Okay.
at a 6,000 crore asset valuation.
Okay. 2,000. Okay. Understood. That's very clear then. Yeah. Thank you so much. That's all from my side.
Thank you. A reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Pritesh Sheth from Motilal Oswal. Please go ahead.
Yeah, hi. Thanks for taking my question. Good morning to the team. Firstly, on the acquisition. So, just trying to understand. I think Brookfield parent acquired this asset, couple of years back for 5,000 crore, and I think that transaction got completed last year. And now, the valuer has put a valuation of 6,500 crore. So, just wanted to understand what has been the incremental changes in this asset post Brookfield taking over. Is it just on the rentals, or on the occupancy side as well? It was very low occupied when it was acquired, and now it has gone up to 91% committed occupancy. So just your input on that.
Yeah. So Rachit here again. If I can just point you to page 14 of our acquisition presentation. The property was about 75% occupied when Brookfield's private fund had signed up the deal in 2022. It was a valuation for 2022. Right. The 75% occupancy number was at a 120 rupee average rent, which has now become 91% occupied portfolio at a 140 rupee average rent. So the NOI has actually gone from slightly below 400 crores, which it used to be 2 years back, to almost touching 500 crores right now. And that 25% uptick in NOI is what has driven the valuation change.
Sure. And, our cap rate calculation, you have mentioned that, it's at 97% occupancy in FY26. So, how confident are you about the leasing, of this asset from here on?
So I'll request Alok to add, but these properties have been occupied at those levels in the past, pre-COVID. If we were to look at asset by asset, Airtel Center is almost 100% occupied today. Worldmark Delhi and Gurgaon are touching 90%. These are very high quality front office properties. There are many tenants who want to be in these properties. So there's a good amount of confidence that we will be able to take these up to 95%, which basically means the portfolio goes up to 97.5%. But I'll let Alok add on the leasing color as well.
Yeah. So if you really see, Airtel Center is anyway, 100% occupied. We've seen the occupancy for both, Delhi and Gurgaon property moved up in past 2 years. We have seen considerably moving up, and we have a strong pipeline for both of these assets, and we should be able to achieve the numbers we are predicting. We are very confident about that.
Sure. One on Kolkata. So I think a great turnaround there, and you have been highlighting about very strong leasing expected in Kolkata. What is your outlook on the asset now? By when can we see that getting fully leased? Will the conversion of SEZ to non-SEZ be the key driver of that demand, or we are still seeing a very strong SEZ demand in Kolkata as well? And specifically, since we are aiming for another 500-600 lakh square feet, 500,000-600,000 square feet of conversion in that asset. So, what's the outlook there?
So, Sajid, this is a good question, but I would say that turnaround in Calcutta, which has happened, and we have moved from 70% to either we call 88% or actually it's high 90s. That has happened for both seasons. We have seen a good SEZ demand, but the kicker has really come in, signing off this non-SEZ space by Indian leading bank, which would not have taken, SEZ space. So both things have worked to their advantage, and we also have seen the rentals going up, especially for the non-SEZ space. They have crossed 50s, and we're also now looking to push rentals there. Having said that, there's more than enough demand, and we are very confident that we should be able to achieve occupancy in terms of high 90s. We are very confident how to just tie up so that whatever demand we have, so as and when this short-term space gets vacated back to back, we can tie it up. So that's something we are planning, we are working, and feel very confident and positive about able to take this asset to very high 90s.
Sure. That's great to hear. Just lastly on the conversion. So 1 million square feet already converted. Is it just that Kolkata one is leased out, or we have seen any other progress in converted space in terms of leasing, and your experience in terms of time taken for this conversion, and how quickly we can convert the next 1.2 million square feet that we are eyeing for.
Yeah, so for 1 million square feet, we already have in principle approval. There, Calcutta, we have applied for conversion of about 0.6 million, 0.6 to 0.65 million square feet. That is expected to happen in next 10 days. And the final approval, last leg of approval, we are going to get in next 10 days. For other assets, probably it will take maybe 4 to 6 weeks. Our experience is it takes about 2 months, 2 months for getting the space converted, and as we move ahead, but let's take 2 months. This time could be shortened in case there's a tenant waiting. So that's where we are. But just to add that other assets also, we have a strong demand for tenants who want non-SEZ spaces, and we are working with these tenants to sign them up and parallelly take space for conversion. Once this year, once this 1.1 plus 0.2 million, 1.2 million gets leased, we can take more space. We want to take in, kind of not all in one go, but after 1.2 million, we'll go for the next round.
How much would be left after this 1.2? Another million square feet, is it?
So that will decide depending on the demand. We will decide. We can convert 50% of the we can convert, but that will decide how much you want to convert.
Okay. Thank you. That's it from my side. All the best.
Thank you. The next question is from the line of Parvez Qazi from Nuvama Wealth. Please go ahead.
Hi. Good morning, and thanks for taking my question. So congratulations for a good leasing pipeline. So my question is now on the NOI and NDCF. Now that the leasing pipeline picking up, do we see a scenario where, let's say, the working capital movement might turn to our advantage, and the impact on, let's say, the NDCF front could be higher than what the NOI growth could be for the similar set of leasing?
So we are already, if you see our deck, we're already saying that we are saying 15% NOI growth we are already projecting. And that's something we'll keep that number at there. And as of course, as we move ahead and our leasing numbers, occupancies move higher, we can revise these numbers, but as of now, we are projecting a 16% increase in NOI. In terms of NDCF, we already have said that, for next another 2 quarters, we are hoping to distribute about 4.5 to 4.75 rupees. And after 2 quarters, we'll review these numbers.
Sure, sir. Thanks. That's it from my side.
Thank you. The next question is from the line of Puneet Gulati from HSBC. Please go ahead.
Yeah, thank you so much. My first question is if you can talk about the confidence on leasing the new acquisition portfolio in terms of more color, because it seems it's more Gurugram oriented. Worldmark, Aerocity seems fine. Airtel Center seems okay, but on the other part, if you can talk a bit about what kind of tenants are you looking at, and how good is the pipeline currently?
So, Puneet, if you really see, I've already mentioned the kind of tenants we have in Gurgaon as well as in Delhi. If you talk about Delhi, it's next to airport. We have tenants like EY, Mitsui. We have Coworks. We have Brookfield properties, and banks are there. A lot of Japanese companies are there. A lot of European companies are there. This is the first wherever a company wants to open a office in Delhi. This is the first place of call. And we have seen the occupancy moved up. We already seen the occupancy moving up in the last 2 years, and we are very confident that balance space we have a strong pipeline, and gradually it should move up in Delhi also.
So these are all non-SEZ assets, right?
These are all non-SEZ assets. These
Yeah.
are all non-SEZ. Delhi is non-SEZ. Gurgaon is non-SEZ.
Yeah.
And it works very well with us because we have 2 SEZ assets in Gurgaon. Of course, now we are able to convert SEZ to non-SEZ. Plus this asset we have, which is again a non-SEZ asset. So it kind of complements and supplements to our existing portfolio. So very good addition in that.
Yeah, so I was wondering, why would they still have 86% kind of occupancies, Worldmark Gurugram, Worldmark Delhi? Why would they still be at 90? Why not higher end? And where are the market rents for Worldmark Delhi now?
Yeah, so if you see, we always have maintained that we, of course, occupancy is important, but we just try to always, maximize the NOI, and that has been a strategy. And when pipeline is strong for Gurgaon and Delhi both, we'll gradually lease them up to increase maximize our NOI. If you see, so that's in terms of strategy. For Delhi, of course, the rentals in range of 200 plus right now.
Which is the in-place rent as well. So there is not much.
220 to 225 now, and in-place rent is about 200 years.
Okay, so
200 plus, it makes 225 around, and that's the number. That's what we're leasing at.
And Airtel Center is now 100% owned. How old has that been? Because Vale is still small at 4. So how should one think about? Is there any risk that they might move, or given that now they have sold their stake as well, and there is no vested interest, or is that a proper?
So Puneet, Rasit here. So Airtel has a 3-year lease left on this property. As a part of this transaction, they're willing to extend the lock-in by about 2 years. So we'll get about 2 years of lock-in in the REIT ownership. Beyond that, there's 1 year of lease term that will be left. And beyond that, there's 1 year additional backstop that Bharti Group is giving to ensure that should the property take about a year to refurb and get leased again, we at least don't lose out on the cash flow.
Refurb is your responsibility, right?
The lease up is our responsibility, but that's a leasing risk that we take in our business.
But right. Just to add here, Puneet, this is this data center is at a pretty marquee location, right on expressway, and as and when and if it gets vacated, it will not be difficult to lease, and we should be able to lease it fast and at kind of a decent rental.
Right. And is there any indication from Bharti Group as to how long do they intend to keep owning the REIT units which they will get?
And we don't have any indication from them. The regulations prescribe for a 1-year lock-in. If you go through some of the press releases that have been put up, I think the intention of the group is to grow the partnership. So we see them as a long-term unit holder and also a provider of future assets going forward.
Okay, so there are more assets beyond this with them that you have in private space?
Yeah, I mean, look, there's nothing tied up today, but look, I think the group is fairly inclined, given the promise of our vehicle and the long-term ownership mindset that they come with. I think, and if you can just go through some of the press releases that have been put out with the quotes from senior management from there, we have great confidence that they will be a long-term unit holder and will also create a pipeline of assets for this REIT as they continue to develop on their private balance sheet.
Right, this is helpful. And lastly, Alok, just going back on the, you said net leasing of 1.6. Is it possible to give some more color in terms of which all assets are you looking at there, and what would be the proportion for various assets?
So actually, if you really see, let me take asset-wise. Calcutta, we are 88%. If we don't count that short-term lease, we count that short-term lease, we are at 98%. So our endeavor is that, we tie up that when this short-term lease gets vacated, we're able to get our long-term players. So there's more enough demand. So Calcutta, which was, so Calcutta is something sorted. If you see Kensington, it is at 95%. And hopefully it will grow. I mean, it's a small asset, 1.5 million, heart of Bombay, very strong demand. So hopefully we should be able to take it further only from 95%. Powai, we are at around 90, but there also there's a leasing pipeline is there. So now, endeavor would be to take it further. We should go beyond 90, and that's in terms of Powai minus Kensington. And one, as we have always said, it's around 97, 98%. There's hardly any office space. There's a bit of amenities that we're working out to kind of ensure that gets leased up. So if you really see these 4 assets are, I think a decent space. Now our effort is on in both Gurgaon assets, G1, G2, and N2, which is Noida. These three assets also have a, the good part is like, SEG reforms has done a great, favor, great kind of outcome. So we have a demand from SEG as well as non-SEG, and we are hopeful that next 12 months we should be able to meet our leasing guidelines of, maybe hopefully at upper end. We should be able to leasing guidelines, and all in these three assets also our occupancy should go up.
Understood.
Does that answer your question?
Yeah, that's fine. That's all. That's helpful. Thank you so much. And expiries on G1, will that impact earnings at all, given that there is income support there? So
no, there's very limited expiry in G1. There's a very limited expiry in G1.
Okay. Okay, great. That's all from myself. Thank you so much.
Thank you. A reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Yatindra Agarwal from Third Life. Please go ahead.
Hi. My question is, what will be the actual occupancy of the REIT? So 82% is the committed occupancy and 87% is economic occupancy. So what's the actual occupancy of the REIT? Thank you.
Sorry, can you repeat the question? Actual occupancy now. So that's what we are saying is 82%. Actually, is 82% right now without the acquisition benefit. With acquisition benefit will be 82.5, and
but that 82 number includes the committed occupancy, which will be coming over the period of next 6 to 9 months or a year. So what will be the actually occupied with on which we are earning rentals right now?
No. Whatever is going to come up, that will lead to occupancy increase. Right now it is 82%.
Okay.
And whenever the more leasing happens, then the occupancy will keep moving up.
Yeah. Okay.
Thank you. The next question is from the line of Parvez Qazi from Nuvama Group. Please go ahead.
Hi. Thanks for taking my follow-up question. So my question is regarding the Delhi AeroCity market. Now, obviously, over the last 15 odd years, it has done well, but there is a fair bit of supply, I think, in the pipeline also. If I'm not wrong, I read a newspaper that they are looking at almost some 4 million square feet of new office space by 2029. So in your sense, what is the kind of demand which is there in that particular micro market, and how do you see, let's say, occupancy for the entire AeroCity district and rental growth moving up, let's say, over the next decade or so?
So let me take this question first. See, in terms of when you talk about this Delhi AeroCity market, it's one thing. It's pretty unique. It is unique, and many of the companies which want to start office in Delhi, I mean, this is their first place of call, and that's why we are seeing occupancy moving up. We are seeing rentals moving up, and this the supply which comes in Gurgaon and all that doesn't compete with this Delhi micro market. And we have of course we have enough pipeline for the vacancy what we have, and we continue to feel that whether this pipeline will get occupied. In terms of rental moving up, it's difficult to say how much percentage rental will move up, annually. But 5 to 7% rental move in any micro market is something P1 that continues to happen on average, I would say.
Sure. Thank you.
Thank you. The next question is from the line of Karan Khanna from Ambit Capital. Please go ahead.
Yeah, hi. Thanks for taking my question, and congratulations on marquee asset acquisitions. I had a few specific questions relating to the acquisition. First, if you can help us understand the broader timelines for completion of the acquisition. That's question number one. Second, as part of the acquisition where you're acquiring AeroCity Worldmark portfolio, Bharti also has few projects under development. That's Worldmark 4, 5, 6, 7, and World Mall. So is that something which will be considered under active discussion at some point? I understand that's currently part of Bharti Realty portfolio and not the JV. So if that's the case, some sense on that. And third, if you think of the acquisition again, where you're also acquiring Pavilion Mall in Ludhiana. So how should we read this? Will there be more acquisition in the retail front, or is this a one-off that you're acquiring? Thank you.
I will request my colleague Rashid to take this question. And Rashid, let me know when I have to step in.
Yeah, can you repeat the first question that you had?
Yeah, so first question is on the timelines for completion of the acquisition.
So the timelines to completion is, about 45 days from now. I think our unit holder meeting has been scheduled for 14th of June, following which in about 15 days we should be able to conclude. There are a few other, very small condition precedent which we don't expect to be a bottleneck as we pursue this transaction.
Sure.
On your second question, so on the first one, look, honestly, by June 30, we should expect this asset to have come to the REIT to the extent of 50% stake. On your second question, look, yes, you are right. There are more developments happening, but the way we view it is strengthening of this district. In many ways, we see this as the BKC of Delhi, right? Because of the superior infrastructure connectivity, I think great roads, the metro is already operational, great proximity to the airport, good access from both Gurgaon and Delhi. So I think from that perspective, we see this as a location for the future. And to that extent, whatever Bharti Realty is building should only strengthen the character of this location as an office micro market, including a large mall, which will be fairly state of the art. So that's how we view their development. Today, there is no understanding on those assets, but as and when they get built and leased, they may become suitable for the REIT to pursue should Bharti want to sell. So that's how we view it. On the third question, Pavilion Mall, yes, it's a one-off. It's a part of the portfolio, couldn't be segregated. So at this point, I think we will. There's no intention to pursue mall acquisitions as a strategy. However, of course, since this is a part of the portfolio, we'll continue to operate it.
Sure. And as a follow-up, how should we think of, acquisition? Perhaps at some point, will you be also considering acquisition of balance 50% stake from Brookfield parent to make this a completely 100% part of the REIT?
Yes. So the REIT already has a right of first offer on that stake. That parent still has about 2 years of regulatory lockup that is ongoing. So once that expires and the fund wants to sell, the REIT will have a first look. So it's a conversation for that point in time.
Sure. This is helpful. Thank you and all the best.
Thank you. The next question is from the line of Sumit Kumar from JM Financial. Please go ahead.
Hi, good morning. Thanks for the opportunity and congratulations on able to conclude a market acquisition. My first question is on the land for this new acquisition. If I understand correctly, it's on a leasehold basis from the Delhi Airport Authority. So if you could give any color on what are the lease rental payments and what's the tenure of the lease. That's the first question. The second question is on the contractual escalations of 6.8 million square feet lease area is at 7.4%. So what are your thoughts on this number? It looks a bit, a little bit on the lower side. So I mean, that's those are my two questions.
Yes, I'll take the first one. The lease is till May of 2066, so there are about 42 years left. At the end of those 42 years, there's an option to enter into the lease directly with the Airport Authority of India, at market terms then. So that's on the tenor of the lease. So 42 years straight that's available, plus potentially a market renewal at that point in time. As far as the terms of the lease are concerned, there is about a 30 crore annual lease payment that is made, and it's a part of a valuation report assumptions as well. There's a 30 crore annual payment which is fairly contracted for the balance 42-year term, so there is no ground rent risk on the lease.
Yeah, and I'll take the next one on the escalation. So, Sumit, we had 6.8 million square feet of escalations which were due in the year, and we have been able to realize them all. So there isn't any renegotiation on that, if even that's what you are asking.
And just to add to it, I don't know why you're saying that's the lower side, because
because generally contractual escalations happen every 3 years and in the range of 12 to 15%. So I just wanted to understand, is my understanding correct, or is there something adjusted in that number?
Yeah, let me answer that. So we have, yes, some of the assets we have 12 to 15% every 3 years. At places we also have annual escalations. So, this number is somewhere between them. Somewhere we have annual, somewhere we have 12 to 15%, and this 7% plus number is a kind of an average of these two. Does that answer your question?
Yeah, sure. Just one last follow-up on the acquisition, sir. Given that it's already at 91% and there is a little bit of, MTM potential, is there some sort of synergy that you're looking at or in margin expansion here? Because currently at, the run rate numbers, the NDCF acquisition is 1.1. So 1.1%. So wanting to understand what is the scale up that you're looking at with this portfolio?
Would you like to answer this question?
Yeah, maybe I'll take this. So look, today, if you just refer to our disclosures that we've put out on the NDCF computation on page 17, we are looking at about a 21 crore NDCF at Brookfield REIT share of 50%. This is at a call it 480 odd crore NOI rental number, right? This number can go up to 550 crores in 2 years if we are able to lease these properties up to a 98% occupancy. So that 50 crore at 50% share of the REIT is another 25 crores that can flow through on an annual basis, which means another 4 crores on a quarterly basis. So this 21 crore number or 22 crore number that you see can look like a 25 or a 26 crore number once the properties hit a 97 to 98% occupancy, as well as a near-term MTM that is available in the next 2 years.
Okay, fair enough. Yeah, that's helpful. Thanks and all the best.
Thank you. The next question is from the line of Pradyuman Chaudhary from JM Financial. Please go ahead.
Yeah, hi. I might have missed it, but just wanted to get an update on the assets where the occupancy is still on the lower side, G1, G2, and I think it was N2. So what really is happening? Are we seeing some traction? And I think in a couple of these, the occupancy, quarter-on-quarter occupancy has actually declined. In one of these, I think. So what really is happening there? Is it just the normal normal new leasing taking some time, or do we still have some weakness in these particular assets?
No, yeah. So if you really see, out of 7 assets we have, 4 assets we have talked about. They're at least 2 are around 90% market and Powai, then addition to Kensington, which is also part of Powai, is 95, and Noida N1 is around 97, 98. So 3 assets where occupancies on lower side is in 2 are in Gurgaon and 1 is in Noida, sector 135. And now the good part is that all 3 assets have we can convert SEZ space into non-SEZ space. We already have applied for conversion. We also have a strong and good pipeline for SEZ space as well as non-SEZ space. So that's the good part. So we should see occupancies moving up in these 3 assets also, and incrementally in other assets also, that we are very confident about. And just to answer your question whether it has declined, so if you really see, we have declared that last quarter our occupancy has bottomed out, and from there on, in every asset it's moving up. In none of the assets it's declining. What declining happened? It happened last year. But if you see last quarter and then occupancy are moving up across assets. Of course, somewhere they have moved up much faster, like in Calcutta.
Pradhan and Charendra, I'll just add, if you look at, all the SEZ assets, if you look at Kensington, for example, the occupancy had last year declined to 78, it is up to 95 today. Calcutta was at 74, we are at 88, excluding the incubation space. This is a similar trend, and as these assets go through the life cycle, some assets get leased up faster, but the pipeline continues to be equally robust across all assets. So we are pretty hopeful and confident that we'll start seeing similar replication as we go through the balance part of the year.
All right. And for the space where we've asked for conversion, where we've applied for conversion to non-SEZ, do we have a good pipeline visibility over there for the non-SEZ space?
Yes. So we have applied for 1.2 million. Out of 1.2 million, we already have signed leases for about 50%, and for balance 50%, there's a good visibility. And for at least some of the spaces, we are at advanced stage of discussions for signing.
Understood. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Pritesh Sheth from Motilal Oswal. Please go ahead.
Yeah, thanks for the follow-up. Just, couple of questions on distribution. So one, I just want to understand this for this quarter, NDCF per unit was 4.66 and actual distribution is 4.75. So we'll fund the balance through our existing, cash that we have. Is it? Is that my understanding right?
Yeah, that's correct.
Sure. And, just on this distribution per unit getting back to about 5, earlier we have guided like it would take a couple of quarters more. With the kind of leasing that we have seen in this quarter, any update on that, or will still remain intact with that timeline of from second half onwards?
So, Ritesh, as what we have said, once you do the leasing, there's a bit of a, initial 3-4 months entry also. So, of course, you would appreciate that after lease gets signed and tenants occupy, it takes about 3-4 months to start flowing in. So, we would maintain that for next 2 quarters, we are at 4.5 to 4.75, and after 2 quarters, we'll review and then we'll declare.
Sure. Okay, perfect. That's helpful. Thank you.
Thank you. As that was the last question for the day, I now hand the conference over to the management for closing comments.
Okay, so thank you everyone for joining today's call. We look forward to connecting with you next quarter.
Thank you. On behalf of Brookfield REIT India Real Estate Trust, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you. Thank you.